Hello, now that you've received your disclosures from Shop Your Own Mortgage, we're going to go over just a few things about this loan estimate that you should know. If you have any questions, your loan officer will be reaching out soon if they haven't already, and we encourage you to reach out to your loan officer as soon as you have any questions. So this is a loan estimate. This comes straight from the lender that we registered your loan with. It does not come from Shop Your Own Mortgage. And there is a lot of pre-filled data that will change as we go through the lending process. So I'm going to talk about a few things that won't change and a few things that may. You'll see the loan estimate at the top. You'll have an issue date. You'll also have the applicant's names, the property address, the estimated property value. If there's an appraisal required, that will obviously be one of the things changing once that appraisal is conducted. You'll have your loan term, 30 years on this one, the purpose, refinance, the product, a fixed rate loan, the loan type, conventional FHA or VA, or there'll be a box checked here in another type of loan, your loan ID or loan number, and then a notification on whether the rate is locked. The no will be checked or the yes will be checked. If the yes is checked, as it is in this case, it'll tell you until when. In this case, 4/16/2013 at 5 p.m. Loan terms, these are going to be the basic loan terms. So this will be the loan amount. The loan amount can change, and that's up to you. So if you're worried about financing and closing costs, or you don't want closing costs financed in, or you have a specific loan amount in mind that you do not want to exceed, we can change that throughout the process. It's not set in stone. The interest rate will be the interest rate that we locked in at, if it shows above locked, and or what we registered it with. If this yes box is checked, that means this is the interest rate reserved for you up until that expiration date. In this case, it's 4.25%. The only way that an interest rate can change is if one of the qualification factors for that interest rate change. And what I mean by that is if we do get the appraisal back, you can see here this estimated property value is $180,000 and the loan amount is $150,000. If that appraisal were to come back, let's say at $160,000, which is much closer to the loan amount, that would increase our loan to value, or what the house is worth compared to the amount of the loan you're trying to take. If something like that changes, that would obviously impact the interest rate. But the interest rate cannot change for absolutely no reason. This will indicate your monthly principal and interest payment. Again, if the loan amount changes or anything throughout the loan, that will move a few bucks up and down. Prepayment penalty, all of our loans will say no. We don't have loans with prepayment penalty. A balloon payment, again, there'll be a no there as well. Your projected payments, again, this is the initial estimate. It just takes that principal and interest payment. It will add a estimated mortgage insurance and estimated escrows. These are typically the escrows that are just on your previous mortgage statement. We will get updated tax information and insurance information from title throughout the process. If maybe you haven't refinanced your loan in a couple of years and there's a higher assessed tax value now, maybe your property taxes have gone up a bit, that would cause your escrows to go up by that amount. There's no charge for escrow, so it's your annual tax amount for property tax divided by 12. Same thing with your homeowner's insurance. Whatever that annual policy costs divided by 12, you add those two together and that is where you'll grab your escrows from. If you have an HOA or additional mortgage insurance outside of your homeowner's insurance, all of that will be indicated here. And it'll also let you know what those escrows includes. This one is just homeowner's insurance and property taxes. If other is checked, there'll be a separate page that'll disclose that. Your costs at closing. This is your estimated closing costs, and it'll break it down here. $5,099, including $3,521 in loan costs, $2,078 in other costs, minus $500 in lender credits. We'll explain all that on the second page. Your estimated cash to close. This is another thing that will and can change. This one says the estimated cash to close is $24,901. I'll show you exactly where you can see how that is calculated and make changes if necessary. The box will be checked from or to borrower. If the box is checked from, that means that's cash you have to bring to closing. If it's to the borrower, that is the cash you'll be receiving back at closing. So on page 2 here, we have a breakdown of all of the fees associated with a loan. Section A is one that you want to pay attention to on any loan estimate you view. This is where all origination charges and fees will be. We at Shop Your Own Mortgage charge no lender fees. So there will be no underwriting fee, no origination fee, no application fee. If one appears on that initial loan estimate, we will get it removed. Don't worry if you see it. If there are points, none of our loans are initiated with points unless the borrower wants there to be points. If they wanted to buy down the loan, buy a lower interest rate, whatever that cost associated with buying that rate down would be illustrated here in Section A. In this case, it's saying 0.5% of the loan amount, and that numerically is $750 to buy down to the 4.25 indicated. That's Section A. Section B says services you cannot shop for. These are things that are done on your behalf. So the appraisal fee, we have to use an appraisal management company. It's not a company that we know or choose. We can't have contact with them, neither can the lender. It has to be anonymous in that way. Credit report fee, if you see this on a loan estimate from Shop Your Own Mortgage, it's an error. We'll get it corrected. We do not charge a credit report fee. Most of these other tax monitoring fee, flood monitoring fee, those will be based on your state. They're all going to be pretty small, if anything is there. Services you can shop for. These are things you have the opportunity to choose. The main thing here is title. You can use any title company with any bank. If you have a loan estimate from another bank or you've used a title company in the past and they were able to do it for less than this indicated price here, we can use any title company with any bank. You do not have to use a specific title company with a specific bank on a refinance. On a purchase, the seller will get to choose that title company. So that will be illustrated here. Again, if it seems high, if it's not what you expected or wanted, we can change it. That's something that we can adjust. Section E, taxes and other government fees, your recording fee. This is the recording fee for the county or state to record you as the owner and record the transaction with the county assessor. That fee will be indicated there. Prepaids, if you are impounding, that's where you'll have these numbers filled out. So your prepaids are the either taxes or insurance that you're going to be paying at the loan closing. Usually something that's due already or something that is going to be due before your first payment or shortly thereafter. In this case, there's 6 months of homeowners insurance premium, 1 month of mortgage insurance premium. Your prepaid interest, this is another number that can change. There isn't a specific close date yet. This is an initial loan estimate. We're not sure exactly what day we're going to close. Therefore, we're not sure exactly how many days of prepaid interest we will have. Typically, it is set at 15 and ends up becoming less. Property taxes for 6 months. If you're in certain states, I know, for instance, California's taxes are due in April. So if this loan we're funding in April or May, they're going to put those property taxes on there on the loan estimate to be safe. And if we have proof that it has been paid, we can easily remove it. Again, this is a loan estimate, so a lot of these numbers are pre-filled. This has to go out within 24 hours from the lender. This is our first opportunity to take a look at it, find the errors and corrections, and fix those for you. So don't feel like you're obligated to these. Just make sure that if you have any questions, call us. We can get it revised and explained. Section G is your initial escrow payment at closing. If you're setting up an escrow account for your insurance, your mortgage insurance, homeowners insurance, or property taxes, it will be displayed here. If you're not setting up an initial escrow account, you pay your taxes and insurance outside of the loan. You pay them on your own, either quarterly or annually, and they are showing here. That is perfectly okay. We can get them removed, and if they're not showing here and you want them here, let us know. We can have them added. It is not a big deal. Just let us know. Second, you'll see here how many months they're collecting. The standard is 5 months of taxes and 3 months of insurance. If you see more than that, it just means that they're calculating those numbers based on when your policy renews. Let's say you're funding a loan in May, the 5th month of the year, and your homeowner's insurance policy renews in August, the 8th month of the year. If you're funding in May, your first payment won't be until June. So that's the 6th month of the year will be your first payment. That means you only have 3 payments total until your insurance renews in August. That's only 3 months. So in that case, they would collect the remaining 9 months, and they would add a 2-month cushion to that. So you may see 11 months of prepaid homeowners insurance. That money is in your current escrow account. It will be coming back to you from your current escrow account. Whatever money at your current lender is in that escrow account is coming back to you. In the event of a purchase, you haven't set up an escrow account yet, so there'll be nothing coming back to you from your previous lender. You don't have a previous lender. Section H, other, that will typically be 0. If there's anything in there, it will outline it and explain it. Section I would be total other cost. It's just letting you know this is section E, F, G, and H added together, 2078. And you can see those individual sections here, E, F, G, and H. These numbers at the top, you just add those together. That'll get you that number. Your total closing cost here, which would be D plus I. So I here was your taxes and government fees, your prepaids, your initial escrow payment at closing, and any other fees. And section D is your total loan cost here, which would be section A plus B plus C. So if you take the 3,521 illustrated here and you add it to the 2,078, you will get 5,559. If there is any lender credit, it will be illustrated here in section J. That lender credit will come directly off your total closing costs. So in this case, it's a $500 credit subtracted from the $5,599 in total closing costs, including escrows. That brings us to $5,099. The calculating the cash to close part is where we can make some sense of this. So the calculating cash to close part can change. This is probably one of the most common changes. I would say section G with escrows, as we get the correct escrow amounts from title, maybe updating the homeowner's insurance, those numbers could change a little bit. Once we get that title report, maybe your taxes went up, maybe they went down, maybe you switched homeowner's insurance carriers since the last time you refinanced the loan. Section under J here, calculating cash to close, it will have your total loan amount. It will have your total closing cost, the $5,099, the total payoffs and payments, $120,000 in this case, and it will show you what the estimated cash to close either from or to the borrower is. This section can freak people out because it's not accurate yet. So typically the estimated total payoffs and payments will just be whatever was on your credit report. Most of us know that an actual payoff is going to be different than the principal balance remaining on your credit report. It's usually a little bit higher. The second part of that is the loan amount can change. In this case, there's $24,901 going back to the borrower. We have $150,000 we're loaning out from the bank. There's $5,099 in closing costs being subtracted from that. We're paying the $120,000 loan to the previous lender. That leaves the $24,901 over. Let's say that this were the opposite and that this loan amount was only $100,000 and we had total closing costs remaining the same. Let's say it was a $5,000 in closing costs even, and the payoff was $120,000 still. We would take the $100,000 and subtract $5,000, which means we'd have $95,000. And once we paid off the $110,000, we'd be $15,000 from the borrower. And people would see that and they'd freak out and say, "Oh, I thought there was no money out of pocket. This is incorrect." That is okay. All we would need to do in that scenario is raise the loan amount. And we can raise the loan amount. The only thing that would or could be affected with doing that is, like I said, that loan to value thresholds. Let's say you're taking cash out. You can't go above 80% loan to value, 80% of the value of the home, which could be determined when you get the appraisal back. So if you see a large amount of cash from the borrower and you're freaking out, call us right away and let us explain it. It could be as simple as raising the loan amount. It could be as simple as maybe there's some prepaids in here that are totally incorrect. Like I said, we haven't had a chance to go through this yet. This is our first opportunity to review this with you. It's basically a template, and we can customize it from here for your specific loan scenario. It will have the correct interest rate, and it will have a lot of correct data, but things I've seen some go out where it shows that the taxes are $1,000 a month instead of $100, and they're collecting 5 months of it. Well, that's a $5,000 difference. It's not uncommon for there to accidentally be an underwriting fee or a origination fee because every bank charges them. But because you're with Shop Your Own Mortgage, we don't charge them to you. And so they're not on that loan estimate, even though they might be, 95% of the time they go out. This is the explanation of your loan estimate. It has a breakdown here of the comparisons in 5 years. Your APR, big question about the APR. All the APR is all of the fees expressed as a rate into the loan, the total cost of the loan. You want to make sure your APR is not too high from the rate. If you have any questions about that, call your loan officer right up. They can 100% explain that to you. The last things here are just other considerations. Those are self-explanatory. You can read those. The main thing here is these numbers. We don't want you to be freaked out by them. They can be edited to your liking. If you discuss something with your loan officer and you don't see it on this initial loan estimate, we have to request the bank to make the change. We can't do that until after this initial one goes out and gets signed. Even if there are errors on here, we will need you to acknowledge these. You're simply signing to acknowledge that you received them. We sign that we received them as well. That way we can make changes. We cannot make any changes to these documents until you sign them. That acknowledges that you did receive them within 24 hours. If you do not acknowledge them, the bank will not change anything. Because then it looks like we're changing something that you don't know about or behind your back, so to say. So every single iteration of these throughout this entire loan process will be signed by you, the borrower, and by us, acknowledging that we know what's happening. And at the end of the process, when you're at the signing table, they'll have this initial loan estimate and the final closing disclosure that we arrive at once everything's been fixed. They will put them next to each other, and we will have to acknowledge and sign again that this is where we started and that this is where we ended. So if you see any errors on here, do not worry, do not panic. Call your loan officer right away. We will get them fixed for you. We will explain them. These are just initial templates, so please don't freak out. If you have any questions, reach out to your loan officer. I will keep saying that because it is very important. In fact, before you even read your entire loan estimate, I would encourage you to get on the phone with your loan officer and let them walk you through it. That way, any questions that arise are answered immediately. This is a big transaction, and we do not want you guys to see something that doesn't make sense, you don't understand, or you think is incorrect, or you know is incorrect, and think that that was done intently. Thank you very much. If you have any questions, feel free to reach out, and thank you for using Shop Your Own Mortgage.